We are live.
Okay, guys, thanks for joining us live. The crowd continues to grow every day. We really appreciate your time. And so essentially, our prediction in the short term is a very, very aggressive market rally to keep the public calm. My belief is that by March 15th, we'll have a pretty good idea as to whether the coronavirus is going to disrupt American life or not. And I'm focusing primarily on trying to get some insider points of view from the hospital systems in Miami, New York, are my two main focuses. So by my calculations and quite a bit of research, I think it'll be very hard for them to keep this quiet beyond March 15th. Also keeping a close eye on Italy and South Korea. So whether you think the US economy is great and resilient, or you're bearish like me, but you think that they're going to try to keep the public calm, this is a trade alert that makes a whole lot of sense when we go through the nuts and bolts of it. Okay, so we're being greedy when many people are being fearful. I think that's maybe a Rockefeller quote, but Buffett sure has said it enough times as well. Today's trade is to close out that 320 put for a little profit. I think we just about doubled the profit on the put. Of course, that did not wipe out the losses on the SPY. And we're buying a longer duration put than normal. So I'm buying the March 2nd put. What's the thinking behind that? Well, we got lucky this morning. My expectation is the puts would rush to the exit this morning, taking profits before expiration. And all the underwriters, that forces them to massively buy the SPY. So sure enough, we got that little rebound this morning. And this should set into effect a lot of buying in the SPY. So my expectation is without some serious bad news, which would be hard to beat yesterday's bad news in terms of fear factor, that we should see a very aggressive rebound in the SPY. And so when we scroll lower, I'll come back to the track record. Let's take a look at the specific trade. You can see this is an in the money put option. So it's one strike above the trading price. So in terms of limiting downside risk to cover us between now and Monday, this is by far the best bargain available in the put option market today. Now, yesterday, this would have been absolutely outrageous. The same strike was literally double. So we really got a blessing to be able to buy that downside protection today for cheap. So I'm sure a lot of people are wishing they had sold their put option yesterday. But again, I'm using the puts to reduce risk and trying to capture upside moves in the SPY currently. Now, if you've been following my trades, I was expecting all of this to roll out. Unfortunately, we bet down on the SPY about a week early. And until the WHO would actually admit we have a problem in the States, I didn't want to get bearish. And so unfortunately, we weren't betting down on Monday, but we did have that put option, which gave us the safety net we needed. So my expectation again is to see some very, very impressive upside moves in the SPY to calm the stock market down, to calm the public down as long as they can. So I'll start talking a little bit more about what exactly they're trying to calm down. But again, I think by March 15th, there should be a lot of news that would be very difficult to hold back if the worst case scenario is really unfolding. Now, on the same tune, if there's not bad news flowing by March 15th, then for those of you who are following our full program, sometime around March 7th and March 15th is when I'll want to put downside protection on the TLT position. So we really have a few weeks of very little data that we can rely on outside of watching it grow in Italy and South Korea. So again, the bottom line is we're risking up to $375 per $32,000 invested. And my expectation, and so that's just a bit over 1% risk in the total position between now and Monday. My expectation is to calm the public. They need to dramatically push the SPY higher. So I think we could realize a very significant profit in the SPY between now and Monday. If I'm right, then the cost of put options will be significantly cheaper on Monday, and the SPY should be trading at a significantly higher price point. Now, I think they could push it up easily $10 per share between now and Monday to try to calm the markets. So that's my outlook in terms of how to play the stock market between now and Monday. So I'm aggressively getting as much data as I can, again, out of really 3 cities I'm really focusing on. I might add Kansas to it, but Miami had a tremendous amount of traffic starting in February 2nd. If you give 21 days of incubation period, another 2 weeks to start seeing the hospital systems get clogged up, and another week or 2 to start seeing deaths, that's the timeline I'm worried about in terms of this actually turning into a bigger panic. So if I start to see that data coming in, then we will be able to short the S&P 500 for a huge profit. If I'm wrong and just being Debbie Downer or Paranoid Pete, then that's fine. And again, we will be aggressively long the SPY and then start getting some more downside protection for pro members in our bond portfolio. So that's really the long and the skinny of it. A few interesting data points that can help you analyze this and kind of take out some of the noise. I like to look at the logarithmic chart from Johns Hopkins and remove Chinese data. Let me see, I think I have some chats popping up. 8 chats popping up. Okay, so this is a logarithmic scale. And what that means is instead of it going up in equal proportions, it multiplies by 10. So 10, 100, 1,000, 10,000. This is all cases outside of China. So all you really need to know is if this line plot is going up at all, then the case count is still growing exponentially. And so the big problem here for markets is that we have a virus that spreads without symptoms. So unlike SARS or Ebola or any other epidemic we've had to deal with, you could easily quarantine the cases because you didn't spread until you had symptoms. So the problem with this virus, and according to Los Alamos Labs, right out of my backyard, that's where they developed much of the hydrogen bomb. My family was heavily involved in that, so it's not like it's some crackpot laboratory making this. They're estimating the R0, the spread of this virus, at 6. So the average person will spread the disease to 6 people, and this is potentially happening for a period of 3 weeks in healthy humans before they have any symptoms at all. So you can understand why the US government doesn't want to create a panic because there's really no way they can stop the spread. And so if they did cause a panic, everybody would rush to the hospitals. The hospital system would be overran just like China had. So that's really what I'm focusing on for the next 3 weeks, is to try to keep a close eye on whether or not Miami, San Francisco, and Buffalo, New York are having a huge flow of pneumonia or flu-like symptoms. And if we start getting anecdotal data that their ICU systems are starting to become overwhelmed. So that's really the overall strategy we have for the SPY for the next few weeks. So let me stop and look at some questions here in the group, and then I can show you some data. But the bottom line is the CDC is just not testing for the virus, period. With less than 400 tests it's an absolute joke. So they're certainly trying to prevent a panic. In South Korea right now, they're testing 200,000 people. And we've gone from almost no cases or deaths a week ago in Italy to suddenly 10 deaths and over 1,000 cases. They're now aggressively testing in 11 hospitals in Italy. So I think this is the calm before the storm. But again, I'm willing to change my mind if this slows down and if we don't see the hospital systems in Miami, San Francisco, and Buffalo, New York, beginning to get crowded. Now, I'm not expecting that they're going to suddenly do more testing, but that's where we're at currently.
So when you put this trade on, it was at 317, and you put the put at 318.
Correct.
Right? Yeah,
Yes.
because it's sold off since then, as you see, which helps us now. But you foresee the SPY going up.
I believe that the government wants to keep the public calm and is motivated to rocket the stock market higher to do so.
Okay.
I also believe we won't have a good idea of just how bad it is stateside in the United States. Or let me rephrase that. I think we will, with almost certainty, have a better idea of how bad it is here in the United States by March 15th, just based on how fast it's spreading in other areas. So I think it'll be very hard for them. Now I'm going to pull up a chart from the CDC, which is just absolutely outrageous here, which shows you they just do not want to create a panic. And Oscar, you out there? I'd love to hear Oscar's. Okay, so we have 313,000 international Chinese students who live in the United States. South Korea is testing 200,000 people right this moment. They just told us to embrace for disruptions in the United States yesterday. And the CDC's tested a whopping 445 people. The health officials in Florida are skipping the meetings and potentially have a gag order on what's happening with cases. So our best bet at this point is just to simply watch for the Miami health system to start to become overrun in the next several weeks, and then quite likely to start seeing deaths shortly after. And if that doesn't happen, I'm ready to bet up on the stock market and bet down on the TLT. You out there, Oscar?
Yes, sir.
What's your insight?
Nothing to report. I mean, and nothing is leading me to believe that we're seeing, an extended number of cases showing up in the ER regarding flu or pneumonia type. Everything's to normal now. To the point of gag orders, we've been reminded that anything suspicious should be reported directly to the CDC, but that is protocol. That's always been the case. So nothing to report here.
And yeah, you have a pretty high level of the exact area, right, in Florida?
Well, yeah, we have a fairly large geographic coverage. Let's put it that way.
Okay. So yeah, we have one of the best people possible connected to the health system to give us a heads up. So from my point of view, I think we're just at it's no coincidence that yesterday they decided to come out and put out the big warning that freaked everyone out. So the next 2 to 4 weeks will be very, very telling from my point of view. But it is a relief to hear that they're not freaking out at the highest levels yet. So that's good to know.
Well, keep in mind, South Florida isn't a heavy Asian population, so there's not going to be a ton of travel in that direction. Only the universities will have some Asian students and things like that.
Sure. So my only point is that the Super Bowl attracts a wealthier crowd who probably has a higher chance of having traveled through Asia the prior month to be spreading it. So that's why I like to look at the Miami.
Well, if that's true, but most of those folks are back home.
Sure, but they've already done my thought is they've done the damage.
I hear what you're saying. Yeah.
So if if the Los Alamos lab's remotely close and you're going to infect 6 people without any symptoms, there's no way they can't. I can see why the government's and the CDC is behaving the way they are. If this is a invisible disease that spreads without symptom at a rate of 6 per person, you can't stop it. So we're brave while many are scared, and that's really our trade setup. Let me take a look at how our portfolios returned with this safety net. So the S&P 500, I'll have to check how much it fell in February. Our put options did a good job protecting the portfolio, and our SPY only strategy, we're currently down 2.1%. In our super safe system, where we own the bond market and gold market, we're up 0.4. So the TLT has delivered some profits for us, while the SPY puts have saved us from drawdown. And again, I'll be willing to start buying put options to protect the TLT if I don't think we have a massive spread beginning in the United States. But the simple fact that they've only been willing to test 445 patients is highly alarming. So that fact alone has my eyebrows raised, and why I would prefer to have a lot of downside protection in US equities until we do have better data. Also, the cases outside of China continue to grow at an exponential rate. We're up to 10 deaths in Italy, and South Korea is now testing 200,000 people with 11 deaths and 1,000 cases. So I think very good reason to be alarmed from those 2 standpoints. Now our buy and hold portfolio. Let's review how that plays the markets right now. Still long the SPY, still long the bond market with the 40-40 ratio, and still long gold with a 10% position. And it still has a 5% position on Yang with a 5% position in cash. And so it's just remarkable. I believe S&P 500's fallen. Do you know how much, Dean? Just in February, from the high to the current price? But without touching anything, with just a passive smart strategy, our buy and hold portfolio completely masked all losses and is up 0.1%. So that just goes to show how smart this strategy is when you have faith in it and follow it to the T. Let me pull up the next part of the presentation. Any questions out there, guys, about the trade alert? So we're basically risking 1% on the SPY if it crashes. That's the most we could possibly lose. My expectation is, again, the SPY massively rallies for a potential gain in our portfolio of 2 to 3%, maybe a little bit more. And then we're going to buy a new put at a much cheaper price because the volatility will drop. Ryan, do you want to go ahead and unmute the crowd and let's see if we have any questions out there?
Jim had a question in the chat.
Oh, okay, let me pull up the chat. Jim says playing the VIX. So it's so hard to get a down bet in a market where it goes up 90% of the time. So if you go look at the S&P 500, literally 90% of the time it goes up. It's not designed to go down. So trying to play the downside is very, very difficult. The best way to play the downside in the US stock market is to buy the US Treasury, the 30-year Treasury, because it has very little downside risk when you know how bad the debt problems are in the United States and what the Fed's most likely to do, which is cut interest rates to try to spur business spending and keep the labor market operating. So I prefer to make money from downside moves by limiting my risk in the equity market with a put and then having the TLT rise. So that's how we've actually made money for our pro members this month so far. To bet on a prolonged stock crash is a rare thing. Okay, so I would be happy to bet down. I actually put a few little bets out on the US stock market, and we were about a week early. So my expectation is you missed the volatility spike, and now we're going to need a huge new wave of bad news for any more downside risk. So that's why I'm happy to be long the SPY, not sell a call option in this environment, and have a nice juicy put option to protect me. So my expectation is the VIX will continue to be crushed lower, and the opportunity to buy a VIX call option would probably be somewhere around middle of March. And that again is anticipating that the hospital systems start to get overran with pneumonia-like symptoms. The ICUs start to get completely filled up, and we start to see deaths. So I think that's the only thing that would really give us a huge new shock in the near future. Otherwise, I think we're going to have some pretty easy profits on the SPY.
Yeah, I'm unmuting everybody.
Okay. Yeah, Jim, I normally I love to short the VIX, just not when there's a global pandemic that's spreading worldwide. So I wouldn't touch the VIX right now in either direction. The smart way to play the market right now is, look, the SPY just had a historic sell-off in terms of how fast it sold off. Everybody's covering those short puts they sold. The bad news just hit. So without a huge flow of bad news, I think the smart way to play it is to own the SPY, have your downside protection. Don't shortchange yourself by selling the call right now. And then own the bond market with half your portfolio for the safest way to protect downside risk. Clearly the TLT. Oh, thanks, Ryan. So yeah, you got to realize when you don't have enough data to make a smart decision. We don't have a clue what's going on because the government won't test anyone in the United States. So from that standpoint, you got to realize, if Oscar doesn't know what's going on, I can guarantee you no one else does either. So what we do know is China has shut down the second most profitable country in the world. And they're some of the greediest people on the planet, if not the greediest. So they're not going to shut down China unless there's a serious problem. Okay, so 12,000 deaths from the flu in the US. We haven't shut down anything. China's trying to sell you that there's only 2,500 people who died in China. I don't buy it. Okay, now we're seeing it spread in Italy, South Korea. So being patient right now, smart, keeping our long stock bond strategy is smart. Having downside protection in the equity market is very smart. And again, if this really tapers off, if this graph right here, which shows the logarithmic growth of the virus, if this flatlines when you exclude Chinese, we might want to switch strategies. We might want to get more aggressive on betting up on the stock market and start protecting our bond position, which has delivered a huge return since all of this began. So that I think is the smart way to play the markets right now with the least risk. And so it's worked well. You know, a lot of people who, for whatever reason, just want to be long stocks with no protection. They don't care. You know, I can guarantee you their drawdown in February is much more than 2%. And I would be shocked if anyone you know can tell you they made 0.4% in February so far.
Hey, Jason, according to my unofficial calculations, it's about from the high in February, 8%.
Yeah, so we reduced loss by 80% for our equity portfolio. And if you were following the full system, then you have a little gain so far. And again, I think we'll see the SPY jump up rapidly without a lot of drawdown on the TLT. I don't think the bond market's going anywhere. I think they believe there's rate cuts, which means TLT continues to go higher. And I believe the bond market thinks that almost no matter what happens stateside. Equity markets, I believe, without a huge scare. And I think at this point, the scare is now going to be the virus is spreading in the United States. I think that's what could potentially cause another sell-off in the SPY. So far, we just can't prove that there's a spread in the United States. We had the WHO come out and tell us it's inevitable, but yet the CDC's only tested 445 people, and that's out of a 350 million population. South Korea has a 40 million population, and they're currently testing 200,000 people. So you can't tell me, you know, we're trying to reserve test kits or something of that nature. So what's the worst case possibility here? I spent a good hour talking to a virologist here in Albuquerque. She works for, I believe, Sandia Labs, gets flown all over the world to go investigate bio labs, try to figure out things exactly of this nature. And she doesn't think that this can be stopped because of how it spreads when there's no symptoms. And the worst case is everybody knows someone who died. This passes in a year and we're all back to work. So really, you know, if you look at it that way, life will go on, but businesses, GDP, they're going to take a hit in the short term. So that's something we need to embrace for, protect our portfolio, and try to make a buck if we can. So again, I like to be long the stock market with a put. So we have that in the money put. So if I'm off on the timing and shit hits the fan this weekend, our TLT is going to fly higher and our put option is going to kick in for a nice profit. Dawn says, how do you stop the virus from spreading? You can't. So normally their strategy is they identify who's sick and quarantine them. And usually all the viruses we've dealt with, you show very obvious symptoms like fever, rashes, all sorts of things of that nature. So it's easy to identify who's sick, quarantine them, let them either die or cure themselves, and then you can let them back into the loose. And so that's how we've always dealt with things of this nature. Whatever the heck this virus is, it spreads without any symptoms. So you can't, unless you want to go shut down the entire US economy, there's no way to stop it from spreading. So next question is, what's the mortality rate? Is it something like the flu with a 0.1 mortality rate? Or is it more like the smallpox with a 25% mortality rate? So again, we just don't know. We just really don't know what exactly the data is. And so if you have a humble approach to the markets with a little bit of paranoia, you can be brave when everyone else is freaking out. And I think we're going to see a huge pop in the SPY. And if we're wrong, we make money with the TLT and our put option limits our risk. So again, between now and Monday, our members will lose no more than $375. And the potential return, I believe, between now and Monday is 3 to 5 times that. So I like to have an opportunity where I can risk 1% and potentially make 3 to 5%. So that's my best educated guess as to the short-term moves in the market. Now, let me see if there's any other questions out there. And so to have that, I was about ready to not trade today if the VIX didn't come down, because yesterday to try to make this same risk to reward ratio, you couldn't do it. We'd have to be spending something like $6 to $8 for the same put. So we got a huge discount on the cost of protection. And that's exactly what I was praying we would have this morning. So this allows us to buy the market at a huge discount relative to the short-term change of price. And again, risk no more than $375 for the potential of making 3 to 5 times that between now and Monday. And if I'm right, the cost of a put option come Monday will be dramatically even less money. So I will continue to allow the SPY to rally, rally, rally until we get the next big wave of bad news and our put option will kick in. And again, meanwhile, the bond market is not buying a word of the good news. They believe there's rate cuts simply because of China being shut down. So the bond market gives us a nearly risk-free way to profit from the next big wave of bad news. So that's really the way I'm playing it. Catch the upside in the equities market with a put option protecting you, and let the bond market do its job with the rest of your cash. And again, if I don't see some pretty alarming news by March 15th, that's when I'll be ready to switch put options under the bond market and take a little extra risk in the stock market, which would mean not spending so much money on our downside protection. Let's see what other questions we got. Sean says SARS infection mortality rate was much worse. Well, so SARS data is, set, what is that, like 15 years ago? So all the data has come through, it's completed. When you're dealing with exponential growth of the case count, you got to realize your mortality rate is going to be severely lagging. So I wouldn't bet your horses on the mortality rate yet. Jim, we're never going to sell the SPY. Great question. Never, never, ever. So we will use the option market to profit in multiple directions. But right now it makes a whole lot more sense to let the SPY deliver profits with downside protection. And if there's a huge sell-off, the TLT delivers the gain. So that's the way I prefer to play the markets right now.
Yeah, and real quick, team, this is Dean. I tell people you're gonna have to pry my share of shares of SPY from my cold dead hands, because I'm never gonna sell them and I'm gonna pass them to my kids. So
let's say the crash happens right now. Just play devil's advocate. We're gonna sit here and buy put options, reduce that loss all the way to the bottom, and be the hero who owns the SPY as it screams back up. So who was brave to buy who had put options all the way down to the bottom in 2008 and then was brave to hold that position as the stock market screamed up in 2009? That's what I want our portfolio to do with the SPY. So I'll be pretty reluctant to bet down on the S&P 500, period. There'll be very rare cases where we'll make short bets to the downside. And we can do that by selling an in-the-money covered call and buying an in-the-money put. But yeah, at some point, the sell-off's over and we're going to recognize some massive gains in the SPY as it comes back up. Because Sean says, yeah, if you trust data from China, yeah, just go to John Hopkins, Sean. Here, let me show you guys how to do this. If you want to have a good judge as to whether this is improving or not, okay, you go to the John Hopkins page. You go to this little guy right here, click the expander, remove China, remove total recovered. Okay, we don't care about the actual case count. We care about logarithmic growth. Okay. If this is going higher, you have a problem. And it's as simple as that. So that's your easiest way to understand if the pandemic is growing or slowing down. Okay, so don't trust China. Yeah, and we don't know what the mortality rate is. Oh, so Sean, are you in Hong Kong? Or are you in Singapore? Oh, you're in Hong Kong. So yeah, you'll have, I'm sure, more news than we have. Okay, so Jim Willis has a question. He says, I'm a trial guy, my first trade with you. So yeah, Jim, we hold the put until Monday, and then we're going to buy a new put. So we're going to check in on Friday together just to talk markets, but there'll be absolutely no change. So we will hold that put until Monday for downside protection. My bet is that you're going to have a huge profit after paying off the put between now and Monday. That's the strategy on this trade. And if I'm wrong, your put option protects you and you lose no more. You cannot lose. So this is the best deal, the best bargain in the put option market, considering the level of risk in the market that you could possibly find. So it's one strike above the trading price when we placed it. What's the SPY at now, guys? And if it's gone down $1 or $2, the relative cost is only up a little bit.
314.
314.
Yeah, 314. 313.29.
Yeah, so this is an environment where our full system has so many advantages. If you're just following the SPY program, we're essentially stuck in a strategy where we have to realize we potentially missed the downside move and that there's likely a huge rally in the near future. So we want to have a strategy where we protect against further downside risk, but do not offset a massive rally. So I don't want to sell a call option in this period. I want to buy that right at the money put and see a big rally between now and Monday. On Monday, we're going to have if I'm correct, the VIX index goes lower, put option costs get probably half as expensive as they are today, and we'll place the exact same trade. Now, why did I pick Monday instead of Friday expiration? Well, if I'm wrong, VIX goes skyrocketing back up, we wouldn't even be able to hold the position in Friday because the put option would be so expensive. So I'd rather buy the duration to cover us through the weekend. Weekends tend to be where bad news is released. So if there's going to be bad news, let it dump it on the weekend and we're completely covered between now and Monday. If there's no bad news, the general market forces are going to bid this thing way higher. Let me scroll up and look at some other questions. So again, we can't lose, period, under any circumstances, more than $375 per 100 shares of the SPY between now and Monday. So we'll check in on Friday. I'll give you guys an update on all the information I have, but there will be absolutely no change to your position until Monday. And that's because we got a good deal, a relatively cheap deal compared to yesterday for downside protection. We understand that the protection could get significantly more expensive by Monday if there's bad news over the weekend. So our best bet is to buy the protection and to just sit on this position until Monday. Okay, Bram says, why not straddle the SPY put and call options? Yeah, I don't want to sell a call because it will cut off our profit. So I think the SPY could jump $5, $10, $15 between now and Monday. So if I sell the call, we're not going to capture that massive win. So it's very odd to sit here and tell you, hey, we're sitting on a global pandemic. It might spread to the United States, but the stock market's going to fly high. I mean, that's our prediction here.
Yeah, and you want to own that SPY too. Look, if you have a spread, some companies can change out in the SPY ETF in the time that you own the spread. You want to own that position literally, as far as I'm concerned, for the next century. So yeah, you want to own the underlying stock, and great question. But you absolutely want to reap the rewards of the dividend by owning the position as well. And yeah, to Jason's point, it doesn't make any sense to sell the call. But just some other factors on top
Not
of
when
that.
we've sold off 8%. If we get back
Right.
to 335, once we crack 330 on the SPY, then yeah, sell that call option, use the option caller to make safer profits for sure. But right now, the big risk hit the market. The news has been digested. People are selling their puts. The underwriters are buying the SPY. The government's incentivized to keep calm. So I'm expecting a huge rally in the SPY until we get some bad news. And so again, if we don't see the bad news, which I think I've isolated to track into 3 cities, Miami, New York City, San Francisco, if we just track what's going on in those 3 cities, and I don't see that the hospital flow is aggressively increasing, that we're getting pneumonia-like symptoms. Okay, if we continue to see the CDC won't test anyone, that's somewhat of a giveaway. So right now, best bet is bet up on the SPY with a put and own bond market as almost a risk-free insurance policy, and wait to benefit if the market does crash. And so that's just the general strategy altogether. Okay, Sean says, Jason, are you predicting the SPY is going higher so people who own the SPY will gain? Correct, absolutely. So my thought process on this, Sean, is that if I'm wrong, we're going to get a massive crash continuing through the weekend. I don't want you guys to lose much. And so that's why I chose the 318 in the money put. So the most you can lose is basically the cost of the put. So we're locking in our maximum loss right now, right here. Now the potential here is if the government does not want the stock market to fall off a cliff, they really have to aggressively bid it higher. Otherwise, all the automated systems are going to realize momentum's gone, and they're going to start shorting this market again. So I've been telling you guys this for 3 trades in a row. We've lost the last 3. But I believe this is the trade where we're going to be happy we continued. And again, if we're wrong, it's okay. So let's see what's happened while I've been wrong on the SPY. We reduced loss by 80% relative to the S&P 500. And if you're following the full program, we made a 0.4% return. So if I'm correct, and we do get a huge, massive rally in the SPY, what's going to happen? We're going to close out February with a nice profit potentially in the SPY only system. Our TLT is not going to get hurt, very little, and we're going to add on some extra profit in February for the pro system. So that's really the outlook. Now, if I'm wrong again, and the market does keep crashing, well, it probably will crash another 10% in the near future, and we'll only lose 1%. in the SPY system, and your bond market position in the Pro system is going to continue traveling higher. So
Yeah,
it's-
and Jason, just while you're on that, guys, in February, the SPY is down much more than 2%, right? So I think the last time I looked, we were down about a little over 4%.
I
So
think it's down 8%, but yeah, it was as
from-
much as 10%.
yeah, from its peak. Yep. Yeah. So just pretty neat to see that, guys, and understand that. And Jason, hey, so we have set a record number of attendees for today. So I just wanted to let everyone know that's on a trial. What I'm going to do is I'm actually going to have a little session after Jason's done here to just answer any questions you guys have, walk through anything. So just wanted to let you know we'll be doing that here in not too long. But just figured with so many people in, I'm sure there's going to be much more questions after. So I'm going to host a little special session today for everyone that's in here.
Great idea. And Dean does a good job really simplifying it down to, sometimes I get carried on with more advanced stuff than a lot of new people want to try to digest right away. Let me switch to the iPad, look at some charts, and then we'll hand this over to Dean for Q&A as long as you guys want to go, okay? Also, real quick, if you don't want to, if you don't have 30,000 to buy the SPY, or you just don't want to trade as often, this is our buy and hold portfolio. It's doing great in 2020. And guess how many trades it's had this year? One trade. The only trade we've done was to flip the long emerging market position into a short yang position. So it just goes to show you, if you're smart and you put your capital allocated how we've designed here for you, it does the job remarkably well. Okay, so I'm going to go ahead and mute this system and hop to my my iPad system just to look at some charts and web pages, and then I'll hand it over to Dean to go over the whole program in detail. And so I know a lot of you guys on trials, probably you're a little worried about your stock portfolios. You wouldn't believe how many doctors and health professionals I've spoken to just trying to get some inside information of what's going on. You know, they're all trying to drag me over for dinner so I can help them stop losing so much money. So we feel your pain. I think you're seeing how our system works. And this is really proof in the pudding that we absolutely positively protect clients' money during super dangerous periods in the market. And so okay, let me flip over to the iPad now. And if you guys have questions, start piling them in there. Let's see, I see a few more. Let me see if I missed any questions really quick. Yeah, Sean, according to China, there's no new cases in 13 provinces and everything's great. But meanwhile, schools are delayed to what, mid-April? Businesses are not up and running. And this last weekend, all of a sudden, despite there being 2,500 deaths and no new cases, they feel like they need to build 19 hospitals in Wuhan. So tell me how that makes sense. Testing 1, 2, 3. How's that look sound?
It's okay.
Okay. All right, so let's take a look at some charts. Here's your massive sell-off in the stock market. What could potentially happen between now and Monday? Let's say we're wrong. Stocks do continue to crash. The next really strong support level I'm looking at is around 300. So I'll be tempted to get very bullish on S&P 500 if we do crash to 300 come Monday. And again, that is another 10. That's another substantial. That's a 5% loss on S&P 500 between here and that potential new resistance level. And our maximum loss is 1%. So once again, we can reduce the potential risk in this trade by about 80% compared to buy and hold investors. And if I'm correct here, and they can stabilize the market, my expectation is to see this just shoot up dramatically. So that's really the outlook on the SPY, and we're protected until right here. So that's look at that. TLT, again, a lot of people don't understand what the TLT is, how it works. It's not a company. It's not generating profits. It's an interest rate play. So really, our job in the TLT is to predict how the central bank is going to play with interest rate policy. And so the bond market is expecting rate cuts. So China remains in a lockdown. Next, we're going to see Italy, France, South Korea, Japan, Taiwan going into lockdowns. Potentially after that, and I think we'll have a good idea within the next 3 weeks, if we start seeing lockdowns in high-risk cities in the United States. All of this is going to cause the central bank to lower interest rates. That's their playbook. If they think businesses are at risk, they want to spur spending, keep GDP up, keep the labor up, so they cut rates. So if they cut rates, this can go parabolic. The market's already predicting that. And again, this is a very critical part of our general strategy. We started the year off with the exact opposite outlook, guys. So if you remember, I had a line in the sand and two key things to watch to predict what we call rainbows and ponies. And that was emerging markets was supposed to be outperforming the US stock market because its PE multiples were at 15, US multiples were at 18, and we had just got done punishing China. We're going to be rolling back tariffs, financing their Belt and Road Initiative. And pretty quickly, we saw the US stock market was going up. Let me compare this against the SPY so you guys can see. So this was our alarm sign that something was wrong early in January. And so this little line right here is your US stock market. Again, we came out of October with the phase one trade deal. US was going to pick up bad debt in China. China was going to reroute 200 billion in orders, which was 4 times what they were advertising. Market loved it. Emerging markets was skyrocketing up as expected. But then suddenly out of nowhere, a week before they went public with the data in China, you can see emerging markets sold off rapidly right ahead of their holiday. So they wanted to keep everybody busy till the last second before their 1 week holiday and get as much money out of the economy as they could, knowing that they had a serious problem ahead. So that was really our first warning sign that something was abrupt. I would have never guessed in a million years that some crazy virus was going to break out in China, but I knew something was wrong.
And Jason, you had a question from Sean. He said, why must the SPY shoot up? And he said, interest rates cut?
I think that the SPY is going to shoot up to keep the public calm, just like we saw China do. Yeah, just money flows. So the next thing that we're aggressively watching is the dollar index. And so we had the line in the sand. Let me go to a daily. So our whole outlook for 2020 was that emerging markets would go up, that China would be outperforming the SPY after being punished for really 2 years by the dollar should weaken from rate cuts and now QE. And that just did not happen early in this year, now did it? So let me go to the daily chart. And so almost like clockwork, right at the new year, which further strengthens the value of the dollar.
We're starting
Our
to lose
government-
your picture and audio.
Okay, let me, is that better?
Just coming in and out.
Yeah. Hey, Jason, just another question from Sean real quick too. He says, but SPY cannot move without macro adjustments. Okay, hey guys, sorry about that. We're having some technical difficulties here. I'm gonna go ahead and take over the screen real quick, Jay. And give me just 1 second, folks, and I will do that. Sorry about the little technical inconvenience here. Give me 1 moment here, guys.
Let's see, it looks like it's displaying. You see the S&P 500?
Your audio's back.
Okay, good. Yeah, so Sean, if the stock market crashes, TLT is how our pro member is going to make money. And our put option on the SPY kicks in. This is a very unusual sell-off, so I'm expecting it to be bid up. Because right now, there's no data to suggest that we have a problem in the US, besides people like me who feel like the data is being censored. So the logical choice at this point is to sell your stocks in Europe and Asia, where there is a clear problem. We clearly have epidemic problems in Italy, Spain, Iran, South Korea, Japan, and China. Okay, so that's one. Two, you're not going to want to hold cash because you know that all the central banks are printing money. In fact, I think it was Hong Kong just gave all residents $10,000 cash with some billion-dollar stimulus plan this morning. So if you think holding cash is smart, well, then you're just basically signing up for about 6% loss per year. So that's not a good investment. So unless you're going to go all in on gold or bonds, you got to think, where are you going to move your equity half of your portfolio? So most money managers, most retailers do the foolish system, which is all equities all the time, all the way to retirement. No put protection. Don't think twice about it. That's what's pitched to retailers. Okay, so very, very rarely do I have a client come on board who's smart and has half their money in bonds, because they know that acts as a almost risk-free way to protect your equity position. So money flows. Where's the money going to flow? Right now, US has better earnings, less risk of an epidemic, best health system, and least cases reported. Okay. Europe has a epidemic spreading in Italy, France. They're on the verge of shutting down their economies to try to copycat what China did. Japan and China just had to shut, well, China's shut down. They claim they're getting back to work, but who knows what's really going on there. So at this point, the United States by far is a better bet for stock investment. So even just from that standpoint, you really have no other choice where to invest your money. So that's really why I think money will flow to the United States after this massive sell-off. I think we're going to get a vicious rally until there's a real reason for further panic. Now, the reason I'm warning you guys that I think there will be further panic is because the government is not testing anyone for the coronavirus. It's absolutely absurd. But because they're not, there's little chance of a massive panic in the very short term, from my standpoint. So we're mitigating risk. We have our put option to protect against another massive crash. Again, we cannot lose more than 1%, but the upside potential is probably 3 to 5% in the near future. So I like having a risk to reward where I know I can lose 1, but potentially make 2 or 3. And then when I start to realize, well, all the money managers in the world, they have to invest this capital. If they go put it all in cash, they're fired. They're basically just quitting. Why would you hire a money manager to put your money in cash, especially when Hong Kong's handing out $10,000 per citizen, China's printing $250 billion in a few weeks. So the bottom line is, I think the market will be aggressively manipulated to prevent a panic in the United States.
Yep, and like Ray Dalio says, guys, cash is trash. You're looking at least 6% real inflation at a minimum in the United States, more like 7. So let's just say you have $100,000 sitting on the sideline, sitting in the bank right now. We have this conversation this time next year. You might as well take out $7,000, light it on fire, because that's what's happening to your buying power. Okay, and so many people don't realize that, but it's just absurd. And I talk to people all the time that have, $300, $400, $500, $1 million sitting in cash in the bank, and let's just say you have $500,000 sitting in the bank. That's $35,000 you're losing, and you might as well take it out and light it on fire if you're just going to hold it in cash for the next year. So.
Yeah. So here's a chart. Okay. So a lot of people want to know, when would I actually be aggressively bearish for a long period of time on the US stock market? That's not my outlook right now. I think we have the risk for sharp sell-offs and then rapid rallies. And so that's why we're positioned long on the TLT. That gives us profit if there is any big sell-offs. But the put option reduces our risk to be long the SPY. So LQD is your investment grade bond fund. This is really, there's really 2 big balance sheets that we can watch that have been growing, that are causing the US stock market to grow so much. And so one is the central bank's balance sheet. Anytime there's not a crisis, the US government has a hard time selling its huge deficit, which is over $1 trillion that it can't fund from tax receipts. So in October of 2019, it looks like that's when both parties knew we would have a trade deal. And that's when the Fed switched from cutting interest rates, which they do to help business, and they switched gears to buying up US government debt. Because if there's not a crisis, no one's going to buy the US debt. Okay, so in 2020, the crises began and the Fed's balance sheet stopped growing. So what's kept the US market going to new highs? This is your answer: corporate stock buybacks. So the higher LQD travels represents 2 things. Number one, it means your Microsoft and Apple can gain access to the bond market at extremely low rates. And 2, the quantity of money they can gain access to is also increasing. So the higher LQD goes, the more stock buybacks we're going to see, because this means corporations, they don't have to grow revenues. They don't have to grow profits. All they have to do, talking about burning things, that's how corporations are pushing stocks, especially Apple. Apple's burned
Exactly,
20%.
Jason. Great point.
Apple's burned 20% of their open interest in the last several years from stock buybacks. Now,
Yeah.
their revenues and profits are growing, but at the same time, they're reducing the amount of shares. So that's making the earnings per share skyrocket.
Yeah. Hey, Jason. So let's touch on that a little bit. I would venture to bet a lot of people in this crowd don't really understand what stock buybacks or burning stock does to a stock.
Sure. So let's say that Apple has 100 shares and it makes $100. So it has to distribute those $100 of profit, $1 per share. Okay, let's say next year they're going to make another $100, but they decide to go borrow money overseas in Europe with a negative interest rate, which is crazy. But Microsoft actually was selling bonds at negative rates in Europe last year, and they decide to go buy back half of their shares. So now there's only 50 shares. They're going to make the same $100 next year. Balance sheet shows a debt of $100 loan, but the interest rate's 0, so that it could care less. Well, what's the earnings per share now? All of a sudden, earnings per share has doubled, even though the profit's exactly the same. So that makes the relative value of every share of company A double. So that's the magic that's been driving the S&P 500 dramatically higher. So right now, we have no risk that stock buybacks are going to end. In fact, okay, we have a little sell-off, but that's relatively
guys-
still. Go ahead.
So guys, does everyone understand that? How stock buybacks just dramatically increase stock prices? Okay, and you have to realize this is 30% of the buy volume in 2019 in the US stock market. Okay. So please ask questions if you don't understand it. But it looks like kind of everyone's pretty clear on that. And then
It's
Jason,
about
real quick,
$5 trillion of stock buybacks have occurred, I think, since 2000. I'll have to double check that, but yeah, a huge chunk of the growth of the S&P 500
yep,
is from the corporations are expanding their balance sheet in the debt at a super low interest rate, and they're reducing the open share interest. So
yep, exactly. So Sean, there's your answer to the question of why we think the SPY is going up. Okay, rates are super low. The U.S. economy is the strongest it's ever been, and stock buybacks are right at the peak of where they've ever been. So all of that is what Mark Cuban refers to as jet fuel for publicly traded companies, millionaires, billionaires, and investors. Okay. And hey, Jason, we had a question from Kathy came in. She said, and so folks, real quick, this is a question pertaining to the Pro program. Okay, so not in regards to the SPY. So we're going to touch on it real quick, Kathy, but we'll go in much more depth into that tomorrow. Okay, but Jason, the question from Kathy is, she says, discuss the GDX pullback and what about TLT call?
sure. Yeah.
So-
Yeah, Kathy, my expectation is rate cuts, quantitative easing at the same time. So dominoes are going to fall likely in this order. First, bond market's going to shoot up to as expensive as it can possibly get. And I believe it'll slowly drag gold behind it. Once the bond price is really as high as it can possibly go, then I would expect a massive rally in gold and silver. So the central banks love to manipulate the price of gold and silver, and they will continue to do so. I mean, they're just loading up on it. So they don't want the price to go up too quickly because that's the big buyer of gold right now. So I'm not concerned about our gold play. And I'll flip to those charts. Let's look at this chart real quick. Now, Kathy, did you get your TLT? I know you see a lot of people. There's two types of traders out there. There's momentum traders who like to jump into something that's working and have instant gratification. And the second they see it stop working, they're out. So it's your typical momentum scalp style trader. And it's interesting with Dean and I, we have I'd say the opposite style. So he's maybe more in that camp. and you can be extremely successful with that. I'm more of the more maybe Kathy style, where I would prefer to buy into maybe a value play or the opposite of the trend, maybe have a little bit of pain for a while, and then it starts to work for me. So it's just two different mentalities. So Kathy, I know you were skeptical last week to buy the TLT because it looked like it was overpriced. And I know you were wondering, how could you enter that position safely? So here's your TLT. Here's this parabolic move that I see it going into. And the maximum I believe it can rally towards is going to be way the hell up here, which is not about profits. It's about interest rate changes. And this could probably take a better part of a year to get there, depending on how fast the Fed cuts rates. So if you don't have your TLT position, your likely best bet is to hop into it with a cheap put, like how I've traded the SPY. Although I still have not issued any puts, as I don't think the TLT is going lower. And even if it does, I expect it to have very, very, very little drawdown, even if the SPY is rallying significantly. So tough call. I know it looks like it's nose bleeding high at this point. So yeah, it's tough. Tough to give you a little more confidence in that TLT when it's at almost an all-time high. So I can understand that. If you want to play a little safer, you might buy a cheap put, because the move index, which is your bond volatility index, is obviously at extreme lows. So you can get relatively cheap puts. But in general, just having that stock bond ratio and being humble about being able to accurately predict events that nobody knows what's going to happen next is why I like to have that ratio of capital.
Okay,
let's see.
and then another question from Didi. She says, when you say buy U.S. debt, quote unquote, do you mean loan U.S. money by buying bonds? I sometimes can't follow the slang language.
Sure. So we have for every 100 shares of the SPY, we own 200 shares of TLT. And that's the simplistic way to look at how we play the markets at all times, no matter what. Now, I adjust the risk for our clients through the option market. And so that's where my specialty and attention to detail can help us reduce risk and enhance profits. So yeah, it's just as simple as that. People try to time. And again, you get people who are like, oh, TLT is going up, I'm going to put all my money into TLT. And then all of a sudden we get a huge rally in the SPY. And then you have people the exact opposite. They're like, oh, SPY sold off, I'm going to go all in on the SPY because the TLT is overpriced. And so sometimes you get lucky. But again, I would rather have a bit of humility, understand that there's constant tug of war between these two major asset classes, and then use put options to mitigate risk. So right now, my judgment is that there's much less risk in the TLT than the S&P 500, despite the chart looking like that.
Okay,
So,
and Didi just typed in, no, I'm talking about the earlier comments on the Fed trying to cover the U.S. debt. He said the government can't cover other countries to buy U.S. debt.
yeah, okay, so the US is creating so if we didn't have a central bank that can just do whatever it wants, politically speaking, I don't think the Federal Reserve is a fair system for US economy, but it's what we got.
Nor
And
is it
so,
labeled correctly. It should be
yeah,
called the corporate banking system of America.
yeah, exactly. So the bankers own, I believe the bankers not only own the Federal Reserve, which, I mean, you could just look at their minutes. They do. The banks own the Fed, plain and simple. I also believe the banks own a huge percentage of the people in Washington. So with that said, they try to keep two markets healthy at all times. So all we hear about as a typical, retiree is look at your 401, look at your stock portfolio. You never hear Trump talk about, hey, look at how much money you made on your bonds. Doesn't talk about that. Okay, they want your sheep to buy stocks. And so they have to keep the stock market healthy. Stock market crashes, all of a sudden corporations are going to be doing layoffs. We've got a huge problem. So the government absolutely, positively does not want this happening right here. Nor do the banks, nor do the super rich who own stocks. Okay, so they absolutely do not want this happening. Anytime, and that's why 90% of the time, stock market does what? It goes up. So if the government has a huge deficit, size of $1 trillion plus per year, who's going to buy the debt? Well, if there's crisis around the world, they can sell that debt quite easily. And so if this chart is headed up, the US government is easily selling its debts. The US banking system is not becoming overwhelmed, buying up those debts. And so you won't see the central bank expand its balance sheet. Okay, so without a crisis, we get in this crazy world where the government's going to have a hard time selling its debt, so the Fed starts to expand its balance sheet. So that was the big push from October through December last year. Okay, but since the turn of the year, that's not been the case. The central bank has not increased its balance sheet because the government's easily selling its debt. So now, what's the best indicator for balance sheets? It's corporate debt. So I'm primarily focused on how fast is corporate debt expanding for buybacks, and how fast is the central bank's balance sheet expanding. Okay, so what will probably snap first is not the debt being sold to Microsoft, which is rock solid. This one's at much more risk. So this is your junk bond ETF. So if we zoom out on this, this is your Russell 2000. The S&P 500 is really being driven up by like 10 companies. Most of the profits and growth are in the top 10. So LQD does a good job gauging the health, kind of like your heart rate, your blood pressure of the patient. Well, no problems for Microsoft, Apple. They can borrow all they want and buy back their own stock. And again, like Dean says, hey, whatever happens here with this pandemic, in a year or two, life goes on. Corporations keep selling products. So we're really just worried about what's going to happen in the short term here. Okay, but what about the rest of American companies, the Russell 2000? Well, they actually have pretty cheap debt, access to debt here too. So it did sell off a little bit, but corporate bond market is going to expand. Corporations going to buy back their own stocks. So I don't want to fight that because I know what's going to happen. They're going to go burn shares and they're going to rally this thing massively up as soon as they can. So that's my expectation for your S&P 500. Only thing that I think would stop it at this point would be the coronavirus just gets completely out of control. China can't get back to work. Foxconn can't make Johnny his little AirPod Pros. And then you get a bigger panic. But once again, our goal will be to mitigate risk to the downside. If we're really confident there's a sell-off, we can bet down. But I would prefer to buy put options when the VIX is low. When the VIX is high, the cost of options is outrageous. So it's not a good bet because now you're fighting volatility. Plus you have to get a down move. So once again, the smart way to play this market is buy that put, be long the SPY, expect a rapid rally to keep the US economy healthy here. Because if they don't, and this keeps crashing, then a lot of bad things can happen. And again, if you're following our full complete system, you really have nothing to worry about. Our losses get cut off at 1% on the SPY. And this chart on the TLT is really the parabolic move I see coming if we have to start cutting interest rates to spur growth in the labor market, which is about certain that we will see rate cuts. Even if the virus doesn't spread to US, just because China, they're now predicting China's going to have a -4 GDP this quarter. This is after a historic run of between 6 to 10% and as high as 14 to 20% GDP growth for the better part of several decades. So every country near China really relies on China's import demands to grow their economy. So if China's going to have a slowdown, that's going to force them to do massive stimulus. And again, so I really like the TLT at this point in time. Now, that doesn't mean we don't want to use options and we don't want to own the SPY, but it's when there's trouble across the world, it gives us a very nice setup to be long the SPY, because you got to realize people have to invest their money. They're not going to own cash if they know anything about inflation. They're going to have half their money in stocks at a minimum. Most people actually go 60 to 80% stocks because they're trying to compete. So they have to figure out, what stock market do I invest in? And right now, what do you have to go by? This, okay? Everywhere else has pandemic levels of growth. Even Brazil, did you guys hear about the case in Brazil? So they allowed this Chinese soccer team to fly to LA, then go to Brazil to play a soccer game. No testing whatsoever. They just got back to China, and like clockwork, the first corona case just showed up in Brazil. So US is not testing people because they want to avoid a panic. And that's as simple as it gets here for predicting these markets.
Hey, Jason, a couple more questions came in. Jose Perez said the cost of the 318 March 2 put is going up. What should we do? So, Jose, feel free to go ahead and unmute your microphone. It's the easiest when you guys have questions too. Just unmute your microphone so we can interact live. But so, do you already have the puts or not?
No,
can't
I
really.
haven't. Yeah, this is Jose. Hi, everyone. No, I haven't bought it yet. I was asking because
Did you
of that.
did you sell the other one?
No, because I wasn't in on the other one.
Oh, okay. So do you own the SPY?
Yes, I do.
When did you buy the SPY?
I bought this SPY when I joined the program with the buy and hold portfolio.
Oh, you're doing the buy and hold. So you're protected by the TLT right now. Did you build the full portfolio, hopefully?
Yes, I did.
Okay, good. So you're following the advice of the buy and hold at this point in time. So let me just pull that up just so we can look at it.
And Jose, just real quick while you're on that, were you able to buy shares of the SPY through Fidelity?
Through E-Trade.
Okay, cool.
And I think we found out like Vu. So are you also doing Fidelity too?
You're asking me?
Yeah.
No. So yeah, no. That's a 401k account, so I can't invest in the SPY in the Fidelity.
So yeah, Jason, I think in his specific situation, he per like a company policy, basically, he could only take Fidelity ETFs. Okay?
Right. But we found the basically the copycat of the SPY for him.
Right.
And the copycat of the TLT, which was, what was it? VOO, and what was the other one, Jose?
Yeah, it was. Yeah, I don't have it here because that's for my Vanguard account. So
yeah,
I
your
got
Vanguard. That's right.
Yeah. I actually have 401ks in Vanguard and in Fidelity. I have both, but my brokerage account is in E-Trade. So I'm actually in multiple systems at the same time.
Oh, okay.
So,
So you
so,
want to follow the option program with the E-Trade, right?
yeah, correct. My brokerage account. That's my personal brokerage account.
Okay. Let me pull up. Oh yeah, I gotta share. Let's see. Let me pull the email. Okay, so yeah, for the buy and hold, we did go over how to follow that with like copycats of these same products. So all the big brokerage houses have just ripped off the SPY and the TLT as well as GDX. So we did give you the just like the clone of the SPY and the clone of the TLT. So for that part of your portfolio, you would have no pain right now in your portfolio if you had been following that, which was just basically to get half of your equity into bonds. So hopefully you did that. If not, not too late. You know, we're not in it for a quick get rich scheme. In terms of how to play the current trade, so you just bought the SPY this morning or Friday?
No, I have the buy and hold just as you have it. I'm just
Okay.
asking if I should protect my SPY with a put as well as what I have as in the buy and hold portfolio.
So I think Jason, what he's doing is doing buy and hold with Fidelity, and then basically trying to follow the SPY system with E-Trade. Is that right, Jose? I'm just taking a guess at that, but
That's right. So
cool.
so I have about 28,000 on SPY right now. The question is if I should protect it with this put that you're proposing, the 318 put.
Yeah, so let's see. The put's already making money for us right now. If you took the trade quickly, let's see where we're priced at now. So right now, so you have what is that? 80 shares of the SPY?
90.
90. Okay. And okay. So the relatively similar trade right now would be this one right here, the three. Pull it up. So the put I recommended this morning is already up a lot, 50%. So to have a similar risk that I gave our members, so our members who bought that put right when I put the trade out, they have nothing to worry about. We took the maximum loss the second we placed the trade, and we have absolutely, if you're worried about having a loss, well, with this trade, you took your loss entering the position. You cannot lose a penny more because it's an in the money put. So I wouldn't buy that same one because the price is going lower. That put is already up. So I bought it this morning, as you saw in the screenshot, for like $4 and some change. It's already at 7. So it's already gone up in value significantly. So that would mean if my prediction were correct and the stock market were to rally between now and Monday, then our members have to work off about a $4 cost before they're into profits. You would have to work off $6 or even $7 of cost before you're into profits. So unfortunately, you would have been better off reacting to the trade sooner. In this case,
Right. And Jason, in this scenario, because he does have most of his capital in the buy and hold with Fidelity, he's probably good just to not put on the put. Just
Yeah,
because he already has that protectionary assets with TLT and GDX.
right. I have the TLT and gold. Actually, instead of GDX, I have GLD.
sure, GLD is a good play right now. Okay, so yeah, if you want extra protection, the strategy was to go to the first strike above the trading price. That gives us the best risk to reward ratio. So that's how it would look. Oops. Now this is a covered trade, so this includes buying the SPY and the put at the same time. So again, if I'm absolutely wrong with the market prediction on the SPY between now and Monday, we risk no more than essentially the cost of the put. Not possible to lose a penny more. This allows us to be very brave when everyone else is extremely scared. And that's why the stock market has had the sell-off, the magnitude that we just had. Okay, so I'll continue to place this very similar trade until we hit the bottom, knowing that I'm also generating profits on my bond position with very, very little risk. Just because of what's happened to China, we can almost certainly predict there'll be rate cuts in all central banks for the next 12 months. And that just in itself will drive the TLT up.
Okay, nice. And does that all make sense, Jose?
Yes, it does. Thank you so much. Yeah,
Yeah,
no
my
problem.
pleasure, bud.
So, you know, if you're reading the tape, market's still scared. So probably not a terrible idea to get that extra protection. Because from my point of view, to get people to stop freaking out, they need to get SPY well above 320 and head it straight back to 330. And that will cause everyone to flip their strategies from shorting the market to going back long. So right now they're fighting all the panic selling right now. So clearly, yeah, we had a little bit of a bounce this morning, but it's back to freaking out. Let's see what's happening on our TLT.
Okay, and while you're on that too, Jason, Tom asked how high can bonds go?
Great question. Now we're starting to really think like I do. I love that question. Probably the single most important question for the markets here. Okay, let's talk about rates. So TLT is not a company. This is not Apple. It doesn't have any of the characteristics of a stock. So once you get that, you're going to do much better trading. Okay, here's your Fed minutes, guys. This comes out every few months. This is the secret to predicting the TLT. You have to understand what they're going to do when this happens. I'll show you what's most likely going to happen. All right, so this is your federal funds rate, okay? So last time we had a stock market crash, the Fed's actually not too stupid, as much trash talk as everybody gives them. They, like clockwork, predict stock crashes before they happen, and they dramatically cut rates into them. Okay, after they cut rates, then they do QE. So that's their pattern. So my expectation is this goes to zero, the federal funds rate. Okay, last time something like this happened, when we're bouncing it up and down around zero, you got to go back to the 50s. So we came out of World War II, lots of social spending, lots of free shit. Let's get to the, let's get to the moon, fight the Russians. Let's have absurd monetary policy. Okay, so we've done this before, and it resulted in 30 years of terrible markets. We had runaway inflation. We had Paul Volcker jack up interest rates to 20%. And so ever since we've had Greenspan, Bernanke, Yellen, Powell, they've all had this luxury of being able to cut rates to zero. So my expectation is we're going to cut these rates to zero. So the next question is, well, why are we already at all-time highs on the TLT if we were at zero not too long ago? Okay, so let's pull up another chart. So we're going to get towards the top in the TLT probably before this puppy hits zero. So the next question you got to ask yourself is, what are they saying they're going to do? Okay, I'll tell you what they're saying they're going to do. They are going, this is what they're talking about at least. Number one, they're joking about negative rates, which has never happened in US history, but they're essentially applauding how well it's worked in Europe and Japan. Okay, if you believe that. Two, we're talking about creating an open repo market. Okay, what does that mean? That means if you're a bank, you can buy up US treasuries all day, collect the interest, and then lend it to the Fed for cash. So if you think rates are in a trend that are going lower, that's a great deal for banks. Helps them keep their balance sheets open. Okay, now three, this is what Karen was emailing me about this week, but I've been talking about for months. Now they're talking about, okay, we cannot let interest rates spike. So if we're buying US treasuries right now, let's pull up the treasuries. Okay, so inflation is low. Globalization has created products at super cheap. Savings are not necessarily being passed to consumers, but they're keeping the relative cost of things flat. If you don't look at healthcare and rent, college, anything the government's touched. But you look at things that corporations produce, relative inflation's low. Okay, so they believe that if inflation's low, they should keep cutting rates because they want inflation. That's what they tell you, right? So if they're targeting 2% plus inflation, you tell me why on earth you would want to loan the US government money for 30 years at an interest rate of 1.8%. That's less than their inflation target. So you're losing 20 basis points a year for 30 years if you believe the inflation's around 2%. Okay, so people are not buying the bonds with a 1.8% interest rate for the yield. They're buying this because they believe the yield will go significantly lower and they can sell that bond for a profit. Okay, so how do we predict how low these yields could go? Well, good old China gives us a hint. Okay, so we're going to layer over against the US yield. And that paints the picture that you need to see. Now, I had compared this to other competitive bond markets, but really, I think Germany is the single best economy to focus on. So Germany's economy is highly dependent on China. So if China is having a slowdown, our best way to measure that slowdown is by looking at the German 30-year yield. And so they're the ones who went negative last year. And it looks like they just are about to break. Look at that. They're about to break back into negative debt. So at the high of 2019 or around the bend of the year, if you lent the Germans $1 million for 30 years, you got back $1,224. Now you're going to a territory where if you lend the German government $1 million, you're going to get back, you're going to pay them a penny times $1 million per year. So you're going to be paying them like $11 a year to lend them money. So that doesn't make sense, does it? So the government is really in competition to sell its debt with other governments. And so you got to look, who are you going to bet on lowering rates? The US starting at 1.8 or the Germans starting at negative? Okay, so the lower the Germans drive their yield, the lower the US can get away with lowering their yield. So the German, okay, so that's a 1 month. Let me shorten this. People like Jeffrey Gundlach are going to be having a shit fit. And he's one of my heroes, one of my favorite people to listen to. But the lower this yield goes, the more outrageous we're going to see US monetary policy become. And so it does indeed act as a great leading indicator to predict where our yields will go. Now, when did China first start to prove its state organized economy was not properly working? When did it really start to break apart? The answer was really in 2005. That's when their GDP first just fell off a cliff and it's never recovered. It's primarily from building lots of property that's not being used or rented now. So it's just a huge loss. And so you can see the German 30-year yield has been tanking. And so investors are betting that the German central bank will be forced to lower rates and then to use its central bank to gobble up this debt. Otherwise, their government will become unfunded. So this is our best indicator to try to predict just how low these can go. And I'll be doing more analysis. I thought we had a year before this was going to happen. I was expecting rising yields, China-US cooperation, and relatively decent growth worldwide. And pretty quickly in 2020, that just did not happen. The first sign was when emerging markets sold off as US equities were rocketing to new highs in the face of a historic US-China trade deal. Okay, so I'll be doing a lot more analysis on this. There's some experts I like to listen to who all they do is focus on this. Without tremendous research yet, based on some of the moves we've seen, expecting rates to get maybe another basis point lower, I think this could go, depending on how long the slowdown lasts, I would think the top is around 175. So I'll be doing a lot more research before we do that. And again, if we don't see the US having some pretty serious problems in its health sector, in its hospitals within the next 3 weeks, I wouldn't be surprised if we get a sell-off in the TLT. So for those of you who are following the pro program, you know, I will be happy to protect against downside risk in the near future with a put, at least for some short-term volatility. Big picture, if we really have most of the world at least going through a short-term quarantine to try to fight off this pandemic, then yeah, I think this will rocket higher for most of the year and probably get scary. So what's the Fed saying they're going to do? They're now saying that they're going to control the yield curve. So let's look at the yield curve now. It's another good thing that most investors don't know about. So here's your inverted yield curve. So the Fed's currently happy to buy these 3 dot points because they're short-term debt that expires in a month, 3 months, or a year. And there's even different time ranges, but these 3 points is what our Fed currently says they're buying, and it's not QE. Okay, so they're controlling these already. That's why the bond market is aggressively buying this, because they expect this front end of the curve to be artificially lowered, probably down to 1% in the near future from the Fed cutting rates, which will drag the rest of the curve alongside it. Oops. So this yield curve is very telling for the bond market. Now, okay, so what's the Fed going to potentially do as we get towards zero? Well, they're talking about controlling the yield curve. So they don't want these interest rates to spike. That would make the debt very expensive for the government. And it would also cause everyone who bought at super low rates to be holding a huge loss. So you'd be sitting on a bond that's losing its value and paying you a yield that's less than inflation. So that would be an absolute disaster. So from what I can see from their minutes, their plan is to drop these rates super low and then to buy all of the debt. So the central bank's balance sheet, again, so when there's crisis around the world, they can get away with just about anything. And everybody's buying this because they think the rates are going to go lower and that the Fed's going to buy it from them for a profit. It's the second things turn good. So if we have a panic this year that causes them to drop rates lower, and then the problems are solved, everybody who bought up US debt is going to be wondering, well, do I want to make 1 to 0.5% a year for 1 year, 5 years, 10 years, 30 years? When they're telling us the inflation rate targets 2%, no one's going to hold that. They're all going to start selling. So the Fed is planning to drop these rates super low, keep it competitive with other competing governments so that our yield still looks attractive. So I suspect this will drop towards this area. And then once we get through all this chaos, that's when the real problem for the US government comes. So that's where this comes into play. And this will be massively bullish for stocks. So this is our other favorite thing to do for members, is to read the Fed's balance sheet. So the next update comes out tomorrow. This is their balance sheet. They update it every Thursday. I expect it to have very little growth as long as this pandemic is causing fear. It's going to cause us to cut rates to spur spending, keep the labor market healthy. And then you're going to have everyone and their mom trying to sell the treasuries. And that's when I think we're going to have a massive, massive expansion of the balance sheet. So who knows what we want to own when they do real QE? Sure, you want to own stocks, but what will outperform stocks when they start buying up the entire yield curve?
Hey, Jason, a couple more. You have about 10 more questions that came in. So I'm going to start rolling through some of them. Okay, so let's see here. Going back up to the top. So Didi said, yeah, does selling US debt equal some country buying US bonds?
So the flow of debt from the government is auctioned, and only a select group of banks are allowed to bid on it. The primary dealers in America have to pick up the tab if it's not sold. So we prefer to offload our debt outside of the US banking system to foreigners. And so if there are trouble, so it's very beneficial to the US government to go stir trouble around the world. So it's no coincidence that with Trump and his $1 trillion deficit, that he is motivated to stir the pot and cause rumblings around other economies. And surely enough, that's what he did. So that allowed us to easily sell our debt over the last few years. It allowed our government to spend massive amounts of money, which flows through the economy, which helps us have very positive growth for our corporations. Okay, so it's really when there's not a crisis that the US banking system has trouble. So when times are good, especially globally, that the US government's going to have a hard time selling its debt. That's when you have
Jason,
the repo crisis.
While you're on that, it's mostly foreign countries that pick it up, right? Not foreign investment banks? Or is
It's
it a
all
mix?
it's mostly central banks and
Okay,
very, very large banks. They buy it and then they
there
resell
you
it.
go, Didi. There's your answer there. Yeah, so other central banks. So not countries specifically, but other central banks, very similar to the Fed outside of the United States. Okay, Jason, Sean Kong has another question here. He said, I have a question. If I start investing my portfolio for 3 months and then I need to go on holiday for a month, how can I continue? So great question, Sean, and I'll take that, Jason. So yeah, this is actually something I've done, Sean. So I follow the pro program, but when I travel, I literally just take off the options completely and just let the portfolio do its magic by itself. Um, and you can and once I'll have Jason transition the screen over to me later. But yeah, it's a really nice way. Once you have the proper mix of assets, you kind of what I tell people you basically have a bulletproof structure. Okay. And then once you layer the options on top, you literally get an atomic bomb proof structure on that assets. But yeah, so let's say if you're going to go on holiday, for a week or 2 weeks, whatever it is, I would just, just depends if you're doing buy and hold, nothing to do. If you're doing the pro system, just don't worry about the options for, the time that you're going to be gone. Does that make sense, Sean?
Yeah, great answer. Just switch to the
Yes,
buy and hold
thank you.
while you can't, because the buy and hold's designed to be rock solid. Okay, guys. So here's just, here's the answer. When we get to the effective lower bound on the bond market, that's when I see your fireworks going off for you gold bugs out there. So because there's so much money printing going on right now, and everyone knows the playbook who's trading the way we are, all hedge fund managers know exactly what I'm telling you guys. Okay, this is the rare time where your gold stocks dramatically outperform the stock market. So this is a SPY against GDX during the last time the Fed did significant rate cuts. Okay, 2008, they cut 500 basis points, huge rate cuts. Then they did 2 years of aggressive quantitative easing. That's where they buy up government debt because the problem was resolved. So they cut the rates, make money cheap, and then they take care of the government debt by expanding the balance sheet, and you get massive stock rally, but you get an even more massive gold rally. So that's what I think is coming. I think the difference here, the only difference here really is in 2008 and 2000, the core of the economic crisis was centered in the United States. So the US stock market was really the one that was punished. Other markets were too, sure. This time around, it's China's economy that's really collapsing and causing all this chaos. And that's why we're seeing the rate cuts and the potential for QE. So I believe we'll see China and all of Asia aggressively cut rates and go into QE, and the US will have to copycat that move. We may not have this significant of a sell-off that we had in 2008, because again, the crisis is centered around Asia and much less so around America. So I think we could have less of a sell-off than we did in 2008 because the crisis is not surrounding primarily a US problem here.
Okay, awesome, Jason. And then Sean Kong had another question after that, a follow-up question. He said, is the SPY relatively cheap to buy now?
Okay, so with the put option, I believe you have a great risk to reward ratio. Right now, the markets don't live in a world of worrying about earnings or anything like that. So if you're just an old school, trying to find value investments, that strategy is really just doesn't work these days because we live in a world where central banks are manipulating the markets. So I'm more interested in money flows than trying to determine if it's a value buy or not. And so my expectation is a lot of money will flow into US equities because it's the best bet and all the choices available to equity investors, period. And at the same time, the US government is highly motivated to prevent a panic. So they have to aggressively bid the SPY up. So at some point, I think we'll see a massive rally in the SPY. And the best strategy is to own the put. So you have very little downside risk, but you still capture the benefit of the S&P 500.
Yeah, and just quick caveat on that too, guys. Look, I tell people this all the time, and John, I'll tell you this again, but I literally plan on holding my shares of SPY for the next century. You know, is it cheap historically right here? It's been cheaper, right? But is it going to be 20x higher than this 100 years from now? Easy. Right. But yeah, and just kind of caveat that point too. Warren Buffett put some money to work on Monday. He had a huge cash pile. And he said, you know, and this was on Monday. He said, "Hey, look, when you have 3% down days, you know, statistically, that's just a phenomenal buying opportunity." And that was literally a quote from him on Monday, and it's now cheaper. But so yeah, with the caveat, right? Like you want to have either precautionary puts underneath your SPY shares if you do buy some, Sean, or if not, you want to have some protectionary assets that will help offset the SPY position if it does fall. Okay, such as U.S. bonds and metals, as Jason was just talking about.
But yeah, really the TLT protects your stock position. GDX is what happens after the bonds get maxed out. So we're just trying to be way ahead of the curve on the gold play. I expect, what are we at in the TLT? Yeah, 150, 126. Stocks are showing some weakness. Yeah, it's really simple, guys. Protect yourself with TLT and get your risk from the SPY. But let's look at some of the jumps that we have seen after sell-offs of this magnitude. So we're on, let's go to like a weekly chart. So we are from the peak here, from the all-time high, we've gone from a relative 12% gain to negative 13.3. So let's say you had bought the S&P 500 at the all-time high and didn't follow our advice. You could be down as much as 15.5% at this very moment. Okay, in our program, we've lost 2% on the SPY in February. So it just shows you we reduced loss by over 90%. So you're getting the benefits of likely the best investment in the equity world without all the downside risk. And meanwhile, if you do follow the full program, this asset right here is extremely beneficial. It's the most boring, unknown asset class for retail investors. It's so simple to add to your strategy. And again, I'll be happy to protect this with puts when I think the time is ready. But what a rally. So the TLT is up 12% in 2020. All right, guys. So yeah, let's take a look at the VIX, a few other indicators.
Hey, Jason, sorry, I'm back now. I was on chat for a second. Okay, let's see here. Oh, and Oscar did say a radio station in New York announced 80 plus people being tested for coronavirus, probably causing the sell-off. Yeah, I saw that, Oscar. Thank you for posting that in there as well.
Oh, that's good to know.
Yep. Let's see here. Okay. Yeah, guys, TLT GDX questions. We're gonna go ahead and push the rest of those. If you're in boot camp, just call Jason after the webinar, and then we'll touch on him much deeper tomorrow in the Thursday webinar. Okay, cool. Yeah, ask Dee, awesome. Thank you for posting that. She said, I'm just asking for some definitions, not explaining strategy. Yep, hopefully we got that answered for you, and let us know if not. Let's see here, another post from Oscar. see here. He said Governor Andrew Cuomo says 27 people have been tested, so far have tested negative out of the 83 being monitored. It's like 10:10 a.m. wins. News radio is true. Let's see here. And then Augustin said, for the past year, how have your program performed monthly, say with the SPY 100 shares and TLT 200, and so on with GLG and Yang and without options? So Augustine, I'll flip to that in just a second, okay? And Sean, I think that answered your questions too, did it, bud? And Mike said EEM and Yang. Okay, awesome, Sean. EEM and Yang, what is going on there? Mike, feel free to unmute your microphone, give us some more clarity and some more color on your question. I don't really understand what you're talking about, but would love to understand what you are talking about. So Mike, go ahead and unmute your microphone and give us some more specifics, please, so we can help answer that. Look forward to doing that. But definitely need some more specifics before we can help.
Is this the headline you're looking at, Oscar? Where's Nassau County? Is that New York or is that
That's in New York.
New York? Yeah, I've
No,
heard a
that's-
lot of. Go ahead.
Yeah, someone texted me with that.
Okay. Yeah, I've heard a lot of rumors that it's already pretty rapidly spreading in New York, which makes sense. That's our most highly densely populated city by far. And there's a lot of money there. Well, probably like 90% of the money managers are right there in that small space. So certainly that would cause a sell-off. So very good. Thank you so much. And exactly why we have to be humble and own our put option, because it is already paying off. What's the chain of command in the hospital system, Oscar, in terms of who reports data to who and how it's controlled? So
Well,
could you tell us anything about that?
I can't really speak to it that much, but the fact of the matter is that it flows through the administrative team first, and then it gets deciphered out to a corporate level or a higher level, and then it gets distributed. But obviously, the first indication of anything goes straight to the CDC.
Yeah. Well, there you go. Didn't expect we would start having cases pop up today, but there you go. We just had the first case in Loveless, a fellow in New Mexico. I've been trying to get eyes on the ground as much as I can, but some fellow was in China for a 10-hour layover, flew back to Albuquerque, had pneumonia-like or flu-like symptoms. They tested him for 2 types of flu, came back negative. So we'll see if they can even test him here. From what I understand, only 10 states even have the testing kits. So yeah, if we end up having to do anything remotely like what China's had to do, you guys are going to be very happy you are with our team here. We got quite a good network going between our members and all the research me and Dean and Ryan are doing for you guys. Wow, I can't believe that just hit right now. Yeah, you don't shut down China for 2,500 deaths. I think it's closer. I think it's underreported by a factor of between 50 and 100 to make sense. Anybody, Sean, did you hear that rumor from this weekend that Wuhan was going to build 19 more hospitals? I was wondering if that was fake news or if that's real, because I knew they rushed to put up 2 hospitals. Okay, that's crazy, but all right, let's build 2 hospitals. But now they're reporting that the they're telling us that the growth in China is, 0 in most locations. And then we get this headline that they're going to build 19 more hospitals in Wuhan. So that just doesn't square up.
And Doug Lewis had a question, Jason. He asked, whose news feed was this?
That I just had. Yeah, if you guys want to follow my Twitter account, I don't post unique content, but I do retweet what I find critical. It's at generates income. And so I have, I tried to, if you can see with the way we trade, I try to simplify not only our investment strategy, but also the news flow that I follow. So I really believe less is more. So I'd like to try to generate profit with less work, less risk. And so as you can see, currently I'm only following 15 people in terms of who I might potentially retweet. But if you follow my list, there's a guy named The Longview who has a lot of good lists organized, which I can pop into to get specific information that's timely. But I also have a specific list right here called Virus. This certain group that I'm now following in here, which is only 4 people. And again, these are not going to be mainstream media who are going to report. Now, this fellow does work for a big media company. He's in China, but these 3 also. They really have very good breaking news that's specifically related to cases breaking out. Here's the 19 medical folks in China who've died. This guy was in his 30s, was the first whistleblower. So yeah, you'll have access to that. But I retweet whatever I think's interesting or important. Here's this guy's pretty good at predicting bonds, as well as Jeffrey Snyder's two people. I don't take anyone's information as the holy grail. So it's really, we're trying to understand stock, bond market movement, policy, interest rate changes. Here's interesting stats. Look, in Italy, February 6th, 3 cases, February 20th, 3 cases, February 25th, 325, and 10 deaths. That's exponential. South Korea, 28 February 6th, 31 February 18th, February 26th, it skyrocketed to 1,100 and 12 deaths. Iran, all of a sudden, who knows what on earth's going on in Iran? The whole Middle East is now infected. So again, I truly believe that if this is growing, like I am afraid it could be in the States, that we will know by March 15th. I think it'll be very hard to keep this hush hush. And again, the giveaway here that they don't want to scare people is this. That's absolutely insanity that they've only tested 400 people. Okay, there's millions of people who traveled from Wuhan specifically to America during the infection period. Millions. And they've tested 400 people. So they realize, look, it's an infectious disease that cannot be traced because it spreads without symptoms. It has an R0 of 6. So you're going to completely collapse your health system and your economy if you create a panic. Where are we at on the SPY now? Oh, VIX is popping back up.
Okay, and some more questions here. Let me scroll back up. We're getting a lot of questions today. I love it, guys. This is awesome. Let's see here. Let me scroll back up a little bit. Let's see here. Mike said, I think this is in relation to GDX. This is going sideways. Woman working for Korea Air with the virus flew to LA multiple times. So that was kind of a comment. And yeah, Mike, are you on the buy and hold, bud? If you guys don't type in your last names, it's so hard to understand who you are. Or at least, especially if you have a name Mike, please type them in, guys. It'll just really help us identify who's who. But Mike, yeah, please feel free to let us know if you're a client and what you have now, or if you're not a client and you don't have
I can give
GDX,
some. I can give some comments on GDX. So, GDX. Here's your best look at it. Okay, 2008 stock market crash. GDX did not go up. A lot of people think gold is like something that goes up when stocks crash. Not the case. Okay, so what's the? It's a reaction to the Fed. So, Fed's going to cut rates. That's what they did during the crash in 08. They were cutting rates before the crash. Okay, they knew their problems well ahead. They start cutting rates. Then, after it's contained, now the problem's not business, it's government debt. Then they do QE. QE supports your government, rate cuts support your business. So if you understand that, so the biggest push in GDX is likely to come from QE. Okay. So why am I long GDX early? Because we're seeing QE and rate cuts at the exact same time worldwide right now. So I think that we're going to have very little drawdown in GDX. It's going to drift higher. And then soon as the Fed starts doing real QE, which they won't do until they have to. So when is the Fed going to do QE? As soon as the crisis is over. Everybody's going to buy up government debt when there's a crisis. So GDX will probably be flat or up. Let's look at the spot price. Let's just look at the business model of a gold miner. Okay, so they can dig up the barbellic relic for about under $1,000 an ounce. Okay, some of them saying they can do it for $750. All right. So if you can dig it up and get it to market for say a base cost of 1,000, and then go flip it to central banks or your number one buyer, 99%. Well, that's a nice profit margin. Okay, so that's all you got to really calculate there, whether you want to own GDX or not. Now, the big fireworks probably happen after rate cuts go to zero, the crisis is over, and now the government has this massive, massive $110 billion gap in funding versus tax receipts. So the central bank has to expand their balance sheet. What I should do is pull up the, I always just look at the, you know, this is what I like to read for fun. Okay, so they actually grew it a little bit. We're looking for them to expand the balance sheet by 20 to 40 billion a week. That's when you're going to get your fireworks in gold. So don't think your gold position is going to protect your stock position. That's a misconception. A gold position is expecting that when the crisis is averted, everyone's going to try to sell their bonds and the Fed has to buy them. And that's going to create more money in the financial system than ever before. So let me pull up a chart of the St. Louis, just so you can see the growth of the balance sheet. This is a good one, a little easier to kind of look at. Okay, so here we are. We tried to, oh cool, they even have an app. Way to go, Fed. So my expectation is this is going to skyrocket after the crisis is averted. So if we have a crisis, all the money is going to get scared out of stocks for a short period of time. They're going to cut interest rates so that everybody can borrow cheap. Tons of money is going to flood into US debt for a yield that's not attractive. The second the crisis is averted, they're going to realize they don't want bonds, they want stocks. They're all going to try to sell. That makes the yield spike. That's a disaster for the US government to sell its debt. The Fed knows that. That's why they're saying, all right, we're just going to have to swallow all of it. So we're going to see tons of money flood into government debt probably this year, especially if we keep having coronavirus spread in New York, for example. Okay. Whole population's probably going to be exposed to this virus. That's just what you guys need to realize. That's probably what's going to happen. Everybody probably will know someone who got infected, maybe had a serious condition, maybe passed away. In a year's time, population has created the antibodies to fight this virus, just like we do all other viruses. And life goes on. The crisis is averted. Everybody's going to run for the exit on these worthless bonds that pay 1.5, maybe 1. And they know inflation's at 2 or more. So that's when we're going to have the most outrageous stock market rally and gold market rally in all of history, because we're going to have more money, more leverage, more expansion of the balance sheet. So that's what I see coming down the pipeline, if I'm right about this not being able to be contained.
Nice, Jason. Great overview, bud. Okay. Any questions, guys? I think we had a good flurry of about 20 or 30 questions in there, and I think we covered them all. But
Yeah, it was a
anything
great
else?
webinar, huh?
Yeah, that was phenomenal. Any other
Woo.
questions out there, guys? And Jason, if you want, I can go ahead and flip over to my screen here in a minute too, and
Sure.
just look at a couple things before we finish out here.
Perfect. Well, yeah, I'll go ahead and sign off and let you continue to answer any questions. Any last questions for me before we let you guys go? Or before I let you have at it with Dean?
Okay, let's see here. Jerry said thank you. And Jim said great introduction to your thinking. And yeah, Jim, hang around if you want. We're gonna go through a couple more things. Just wanted to spend a little extra time with the trials here today. We did have a record number of people on trials at the webinar today, so I figured we'd give you all some extra time. Let's see here. Augustin said my question was not answered. Okay, Augustin, go ahead and go ahead and unmute your microphone. We probably had about 50 questions come through in that session, but feel free to just unmute your microphone and let us know what your question is. Be more than happy to. Oh, you know what? Ryan posted it to me here. Okay, he said for the past year, how does your program perform monthly? Say 100 shares of SPY. Yes, I'm going to cover that in just a second here, bud. And let me see here, Jason, if you want to go ahead and flip the screen over to me, I'd be more than happy to do that.
Okay, I think you'll have to actually click
Okay,
the share
cool.
button and take it over,
Yeah,
I believe.
okay. Let's see
And
here.
I'll stay on to help with any questions too. So, but we'll just
Okay.
put on your screen.
Okay, perfect. Yeah, so Augustine, great question. Okay, so this is our buy and hold portfolio. Okay, and anyone that's if you don't want to trade options, you want to either enjoy your life or keep working full time, not spend too much time, and really you can do this with any amount of capital. But in our buy and hold, we did a 23% return. Okay, our max drawdown was 1.6% compared to the 7% drops that we had. Okay, so that's in the buy and hold. Now let me go ahead and pull up our SPY portfolio. Okay, so well, let me touch on this first. Actually, this is our pro portfolio, folks. Okay, and it's pulling up. Oh no, it didn't go to the right page. Give me one more second here, guys. Okay. All right, and so Augustine, so to answer your question, if you just did the buy and hold, okay, with that ratio that we recommend, it did 23.13%. It's currently at a profit while the S&P 500 is down, I think probably about 4 to 5% at this point for the year. We're actually at a 2.29% profit. Okay, if you go over and you look at the pro portfolio, okay, this is where we take a higher level of caution. So we take our bulletproof allocation of assets. Okay, and then what we do is 4 days a week, we give it extra protection with option protection. Okay, so this is what that returned for 2019. Okay, 14.83%. What we're by far the most proud of. Our worst month, we had a drawdown period of 1%. Okay, your drawdown periods in the S&P 500, could have been up to 7% last year in 2019. As you can see, our biggest drawdown period was 1%. Okay, and finished the year out 14.83%. Okay, and the SPY system specifically, and these are the three products we offered, did 14%. Okay, so just to kind of cover that, SPY system did 14%, greatly reduced the drawdown. Okay, 2019 in the pro portfolio, we did 14.83%. Okay, and that's where we basically add the options to add even more protection to that. Okay, and then if you did the buy and hold, that did 23.13%. Okay. So yeah, Augustine, and basically, we have people on the buy and hold from anywhere from, $20,000 in capital up to 800,000. Okay, and really the people that are on the SPY program, and that, let me just scroll to that really quick. That is this program right here. We have people anywhere from 35,000 up to about 500,000. And then in our pro portfolio, most of our clients that are following that have excess of $250,000 invested behind it, and all the way up to 4 million in capital. Okay, it's really kind of all about consistency and getting the lowest amount of drawdown humanly possible. Okay, and generating 1% a month is really what we look for. In those two portfolios. Okay. So great. Let me see here. Any questions, guys? I think I saw Tony raise his hand here. Hey, Tony, do you want to go ahead and unmute your microphone, or do you want to just type in your question? Happy to address it for you. And great question, Augustine. Appreciate that, bud. Okay, Tony says no mic. Okay, go ahead and type in your question, Tony. Happy to address it for you. And then folks, while Tony is typing in that question, I'm going to go ahead and pan to this screen really quick. And I'm going to go ahead and post this really quick in the chat box. Okay, so guys, this is really cool. If you're on a trial and you haven't booked a coaching session with me yet, go ahead and click on the link that is posted in the chat right now. Okay, and I'm going to post it literally, and give me just a couple seconds. I'm going to post that in the chat box here. And if you're on a trial, you haven't booked a coaching call with me yet, please feel free to do so. Okay, guys. I've been investing for 16 years. Love talking about the markets. Absolutely fascinated, thrilled, and spend most of my free time studying things. So please feel free to call me, pick my brain. I'd love to learn more about kind of just where you are in life. What your goals are, where you've done well and where you've struggled, so I can figure out how to best to help you grow your account in the safest way possible. And then one other thing, guys, I'm going to post after you go ahead and set up that coaching call. So step one, set up the coaching call. Step two, make sure to see what our clients have said about us. Okay, and you can go to this page right here. But we have a significant amount of capital, guys, with a lot of our clients in here. So would just please feel free to scroll through these testimonials. I do have approval from more than 30 of our clients to actually put you on the phone live with them. If you just want to talk to someone else that's been following the program for a while, and a lot of these people have excess of $500,000 behind the program. So it's probably better to hear it from them than from us. Let's see here. Sean had a question, and he said, "What is the difference between the pro and buy and hold portfolio?" Great question, Sean. The pro portfolio is going to basically utilize options on Monday, Wednesday, Thursday, and Friday to give extra protection to the portfolio. Okay. The buy and hold portfolio, Sean, we're going to go through. I'm gonna hop on a call with you. We're going to see how much capital exactly you're going to put into the market, and then we're going to structure that asset allocation for you and custom tailor it to whatever amount of capital you're going to use. So, but whether it's 100,000, whether it's $1 million, whether it's $4 million, whatever that looks like, we're going to go in there, take a look, and structure that portfolio for you. And if you take up the pro portfolio, basically what you would do is follow the SPY trade today. Okay, allocate 40% of your capital into that. Okay, and then wrap the option collar on it. And then tomorrow you're going to add the bonds position, the precious metal position, and also our short position that we currently have in emerging markets for the pro portfolio. Okay. And so literally from today until tomorrow, you could have full allocation of the pro portfolio. If you wanted to do the buy and hold, it takes a conversation between you and I. Typically takes about 30 minutes to get that set up, get you properly allocated, and we'll tell you when to make changes to that asset class. And what we'll do is from time to time, we'll tell you to go long or short a specific asset class. Last year, we made 5 changes in the buy and hold portfolio. So that one's the least amount of work, and it actually has the most profit. Definitely interesting with people with smaller accounts, and then really kind of everyone that we've seen that has over $500,000 over time ends up doing the pro portfolio with us. But at the same time, buy and hold, heck, phenomenal way to allocate $20,000 if you're just starting as well. Okay, and Jason, this one's for you. Tony
Okay.
says, do you consider the delta of the portfolio in your decisions?
We're doing just a classic Ray Dalio half bond, half stock portfolio, and focusing on money flows. So no, I'm not overly concerned with the option Greeks and things of that nature.
Yeah, Tony. So a couple things, but we want to look at the central banks because that's the only technical indicator on the planet that's always been 100% accurate. Okay, everything else on top of that, it's technical, right? But if you look at the central bank activity, that's where you want to focus your time. Okay, and that's why we focus our time there. Number two, kind of layer number two, we look at macroeconomic environments is layer number three, or number two. I'm sorry, layer number three. We really look at spot gamma and look at CTA inflow, that type of stuff. And all that stuff is just so much more powerful than any Greek technical indicators and options. Because if you don't have those three things in alignment below any of the technical stuff on top of that, it's not going to matter. And so that's why we spend our time at the core of where you should be focusing your time. But great question, Tony. I love it. I know you're big on looking at deltas. John Carter got people really into looking at deltas. Let's see here.
Yeah, so I'm more interested in trying to control the risk relative to the exposure in the bond portfolio. So I'm trying to make those two protect one another for a low volatility. So we're trying to deliver low volatility returns with this program. So in some cases, that means we're breaking even. Very, very, very rarely do we have a overall loss. And if we're really firing on all cylinders and I'm able to predict both the stock and bond market, we're getting above 1% return. So if you're looking for super safe, extremely difficult to lose money strategy, that's really where this shines. Especially as you can see We got a surprise pandemic creating a sell-off that was covered up, and we're walking away with a profit when you're following the full system is really the proof in the pudding here. Or if you're just trying to deliver profits from the SPY, well, we reduced the drawdown by 90% relative to anyone who's just holding the S&P 500. So there again, even without having the bond exposure, we're still doing a good job protecting capital and still delivering return over the course of time.
Yep. Nice, Jason. Yeah. So Tony, basically, if you don't want to lose money in a down market and you want to have the most consistency possible, this is what we're trying to do. Okay. And what we've been able to deliver, that's the coolest thing about the pro portfolio, guys, is when the market does roll, your account does not, it goes up. And that is, my favorite thing about the pro system. That's why I have the majority of my capital behind the pro. Okay. But I still take some short-term risk and do things from time to time to get a little alpha on my cash account. So, and put some money to work on that this morning. Okay, guys, let's see who else is in here. All right, any other questions? Sean, awesome. Appreciate the compliment, bud. Definitely look forward to helping you. And just let us know if buy and hold, the SPY portfolio or the pro makes the most sense for you. Really, if you're trying to make the most money, buy and hold is great. Okay. If you're trying to make the safest return possible, the pro system is phenomenal. Okay. And that does make money in down markets as well. Okay. Jim Willis says, just an FYI, go for it, Jim. And then Augustin had one last question. Sorry, guys. And make sure to schedule your coaching call, okay, before you guys hop off the webinar. Okay. Go ahead, Jim. What was the FYI, bud? Okay. Sean says you're going with the pro. Awesome, Sean. Look forward to helping with you, bud. I'm going to message you my number just so you have it real quick, just in case you didn't have it saved. And just give me a call after the webinar. Happy to help set that up for you. Okay. So you got that in.
Another thing that's worth throwing out, Dean, is to keep our accuracy extremely efficient. We're pretty much just giving out trade alerts on those 4 ETFs. We do a little extra in our boot camp, which we haven't even touched on. But because we're getting very accurate predictions in the stock and bond market, it's not uncommon for some of our members to take that data and then extrapolate it into their own trading ideas. So if you were on the webinar Monday, for example, Mark Stoley was taking some of our trades and optimizing it and making even extra money. So if you are a good trader and you have a lot of technical savvy, I think you'll see that our fundamental analysis and ability to predict these two core markets can also be just as beneficial as the trade alerts themselves.
Yeah, great point, Jason. And to your point, I mean, I my cash account, because of what I've learned from you, I've been able to really add a lot of alpha to my cash account. I can't even tell you how many different times, but it's probably been good for 50 grand at this point. So appreciate your help. Let's see here. Yeah, Marnie was doing that. Mark Stoley's been doing that. It's pretty cool. And yeah, so guys, real quick, I will touch on the boot camp. Okay. And this is something you can combine with our advisory service, or, if you just wanted to outright learn, take our kind of 32 years of experience between Jason and I. We've hired and fired guys, literally 35 different hedge fund managers to run products. Okay. We were able to learn a lot from those people. Okay. And, it's just really cool. So basically what you can do is take our 32 years of knowledge, condense it into the boot camp, right? Condense it into a very short time frame from what you can absorb. We do have some extra trades in there. Okay. But this is talking about the boot camp here. Okay. But just a really cool way to understand how the financial system works and why. And if you guys want to do the combination of the boot camp and the advisory services combined, just call me, guys. Be more than happy to figure out which combination works best for you, and figure out what that looks like for you. Okay. Okay, guys, and just real quick, I put back up the screen here to book your coaching call. So if you're on a trial, you haven't booked a coaching call yet, please feel free. Click on this link. It's really easy, guys. You just click on a specific day and you just select a time. It goes to my calendar. I automatically accept it. It's really cool. So just really easy for you to look at your schedule, see what it looks like, see when you have 30 minutes or an hour today or tomorrow, and then just reserve that time with me, and certainly look forward to learning more. Okay, so Jim had a comment here. He said just okay, or I'm sorry, it was Augustine. And let's see here. Just an FYI, your 318 SPY puts are up 3 points. Yep. Awesome, Jim. Doing their job. Augustine says, is there a reason you don't do this on or with the NASDAQ? And Jason, I'll let you go ahead and address Augustine's question there.
Yeah, we like the S&P 500 because it has 3 options a week. So it gives us a lot more ability to react to moves more frequently and to get better pricing on option. It so goes 2 ways. Number one, you can get cheaper put option protection when you're in a high risk environment like we are now. But when you're in a low risk environment and things are just more normal, then we can collect a lot more income, kind of like your Airbnb model. You might make $2,000 a month renting your house on a monthly basis, but if you can do Airbnb, you might make like $3,000 or $4,000 a month because you're doing shorter intervals at a higher income rate. So there's a lot of advantages to own the S&P 500, from the options market, the liquidity, as
Yep.
well as the safety net of the underlying. Plus, it's the largest fund in the world for equities by far. It's now twice the size of Ray Dalio. So for all those reasons combined.
Yep, great point, Jason. And another thing to add on top of that too, Augustine, better dividend. It's just really nice to have those 3 option expiration periods. It's literally the only equity ETF on the planet that has the Monday and the Wednesday option expiration period. So that allows us to just generate more protection, and when it really makes sense for us to get a little alpha to the upside. And that's a lot more rare than we just protect it, but every once in a blue moon, we'll do that for you as well. Okay, guys, phenomenal webinar. Wanted to see if there's any other questions out there before we go ahead and shut it off for the day, guys. I want to thank you all for your time. It was really fun, kind of seeing all the different questions that came through. Wonderful questions today. And just any last questions, guys, before we go ahead and switch over to hopping off the webinar and just hopping on individual calls with me. So any last questions here, guys? And just real quick, I'm going to leave up the pro strategy one more time, just so you guys can take a look at that. Awesome. Thanks, Jim. Really appreciate that, bud. And Jim said good command of the materials and good moderator skills. Very nice. Doug Lewis said, thanks. You guys are great. Hey, Doug, thank you for joining us. We appreciate your time. Jim, thank you for the nice compliment. All right, guys, I think that should do it. And then just real quick, if you don't have my number by chance too, just going to put it up on the screen real quick. Just call me if you do have questions, guys. And before I leave you, I'm going to just leave you with one last screen. Okay. I'm telling you guys. So like I said, I still do some stuff in my cash account, right? But I'm 35. But I'll tell you what, ever since I've learned this rule and I became more defensive with the large portion of my capital that I take a much more defensive approach with, your life is going to be better. Okay. So guys, never forget this rule. Literally screenshot it, write it down, put it next to your computer. Rule number 1, never lose money. Rule number 2, don't forget rule number 1. Look forward to helping you guys grow your investment accounts in the safest manner possible. Thank you all very much for your time. We look forward to working with you. Okay, Ryan, if you want to go ahead and shut it down, I think we are good to go. Thank you all for your time and attention. Truly appreciate it.